Hi everyone, great to be here at Intersect 2021. My name is Stuart Houston and I look after the Google Cloud Financial Services Strategy and Solutions for Asia Pacific. I'm based in Sydney, Australia, and today I'd like to have a chat to you about how we see the future of financial services with Google in the fintech ecosystem. So, at the heart of many of our engagements in Australia and around the world is this observation that there are a continuum of interaction methods, from in person, human assisted through contact centres such as digital or phone, or self service, of course. The objective at the heart of many of our innovation engagements is to deliver the best possible customer experience, whether it be through direct interaction transformations or by reducing friction from internal processes such as fraud detection, time to unconditional decision, etc. As we see the rise of embedded finance through digital ecosystems, we will likely observe more fragmentation of processes that are not well designed end to end, with the customer at the heart of the journey. So, of course, Google is an ecosystem company. Ecosystem companies are built with a focus on humans, interactions, and monetization. In our case, billions of users across a portfolio of products such as Google Search, Google Maps, Google Pay, etc., trillions of interactions, and monetization through our ads business. Most financial services firms do not view themselves as ecosystem companies. In Australia, there are over 25 million humans, billions of interactions, and monetization occurring through acquiring and retaining customers of financial products. The Google Cloud business model is driven by financial services firms' human interactions that drive monetization through workloads. This could be driven by payments, open banking, risk and regulatory compliance, and many other use cases. Often, Google Cloud operates in a multi-cloud architecture where we are particularly focused on data-driven transformations, usually with machine learning playing a key role in delivering tangible business value. So the monetization that we see can be achieved above and below the glass is usually focused on different dimensions of revenue, cost, and efficiency outcomes. Above and below the glass initiatives are becoming more and more tightly coupled than ever before. So we would argue that your challenges are different now than maybe a few years ago because you're now scaling from a fintech perspective into a level of maturity with new problems. Problems related to customer experience, long-term growth, operational speed and performance, and of course, security and regulatory compliance obligations expected in the financial services industry in Australia and globally. So Google can help in each of those areas because we have industry-aligned solutions, leading artificial intelligence machine learning capabilities. We can bring the best of Google and the entire portfolio of offerings across the Google consumer businesses to the table, and of course, world-class security and infrastructure. And what I'd like to do now is show you some examples of how we've solved for fintech problems for each of the challenges that I just mentioned. So let's start with customer experience. So today, many fintech firms don't have robust customer service centers, for example, and lean heavier on digital engagement. One thing we've noticed is that call center demand can change suddenly and in big swings. When Chime goes dark, or people go looking for stimulus checks, or Robinhood trades go down, or crypto surges, these are moments of real need. The graphs that you see on this slide come from an analysis of Google Trends search data over the last couple of years, and you can see the significant spike in the last 12 months in particular. And we know that those moments of need are critical for favourability, yet they can be met with long wait times. So how can you build a call centre or contact centre solution that automates routine interactions or types of messaging that's helpful and frees up people to handle complex issues? That's where the Google Contact Centre AI solution can help. A good example of this being deployed in real life is with HSBC, where people speak Cantonese and English in Hong Kong, making it hard for quality assurance. Google helps automate the review of multilingual interactions to predict sentiment and follow up with agents in a timely manner. Financial services firms will have to identify their targeted customer segments and figure out solutions they should offer to address those consumers' different requirements, such as those living in rural areas versus those living in cities. It means that they will require tools powered by artificial intelligence and data analysis to understand their customers' needs and improve service experience accordingly. At the same time, they'll need to drive down operational costs. So let me give you an example. An insurance company in Asia we work with, FWD Group, developed an AI chatbot with the aim to enhance customer service delivery, reduce operational spend, and drive its Asian expansion. It was critical that the chatbot, dubbed Enzo, had the ability to establish a more sophisticated understanding of human intent, the customer's main objective when they key in a question or request. To achieve this, FWD tapped Google's AI-powered contact center solution Dialogflow, as well as machine learning text analysis tool Natural Language to create Enzo. Dialogflow in particular proved essential, as it could interpret human intent in several languages, including when used in slang. This was important since FWD had plans to expand its presence across Southeast Asia, and the versatile language support would enable the company to do so more rapidly. Within 2 months of Enzo's introduction in the Philippines, the chatbot had handled queries from more than 4,000 customers, bumping up FWD's previous response capacity by 7%. Enzo also registered a customer rating of 4.5 out of 5, which was equivalent to the company's live chat service. In addition, the insurance company is using Google's Cloud Vision and Auto Machine Learning to power its KYC identity verification, enabling it to quickly determine the validity of a customer's ID. The AI tools have improved the operational efficiencies by over 20% and reduced identity verification costs by half. Forward-looking financial services firms such as FWD have achieved strong business results primarily because they realise that customers should be the key in everything they do. For FWD, the ability to dynamically translate and analyse their customer interactions, as well as understand the context of what they actually need, regardless of language, has proven especially valuable in that region. This will go a long way towards creating stronger brand stickiness, particularly as digital transactions mean less human contact and financial services clients increasingly use multiple service providers for their daily banking needs. So let's shift to long-term growth and building a sustainable monetization strategy. So one of the hot topics right now in financial services is embedded finance. The idea of integrating a financial service or technology with a traditionally non-financial service product or technology. 11FS estimates that this is a $3.6 trillion revenue opportunity yet to be realised globally, and it's evolving towards wider distribution. Whereas today you might build an API on the transactional rails, like payments that can be integrated into a website, soon you'll be able to integrate capabilities like credit scoring into a non-financial or financial product, or maybe go through the whole financing process like Stripe is doing with Treasury. Eventually, you may be able to create an API that can answer questions for people and fulfills unmet needs. Our argument is that you need a flexible API strategy to pivot from these offerings to bring new products to market and to be closer to customer needs. And that's where Apigee fits in. Apigee isn't just a place to manage internal API app development, but also a place for full API performance, monetization, distribution, and so on. Experian is a good use case because they have some Experian Boost and they are shifting towards being a platform company. Integrations go from months to minutes so they can be faster to market. They want to be a technology company with APIs, not just a financial services firm. So another path to sustainable growth and new revenue is ensuring you're not just getting large account volume, but profitable economics. As you can see in the chart, the big banks here have a large advantage still in monetization. The challenger banks have lots of users, but it's hard to get them with multiple products, and it's harder for Cash App, Venmo to make money, although they're starting to with crypto. The question is, how can analytics with Google help address this problem? We can help you understand customers, segment them, and draw insights that lead to better decisions, for example, predicting churn, lifetime value, or next best offer. Faced with tightening margins and increasing threat from digital competitors, fintechs will need to open up their services and establish new ways to monetize their products. Doing so will enable them to build a better profile of their customers and deliver more personalized user experience. Customers across Asia Pacific today are increasingly seeking out digital-first experiences, and expect banking and payment services to offer similar speed and convenience they get from other online services. In fact, bank branches now account for just 12% to 21% of monthly transactions across Asia Pacific, with customers turning to digital channels for routine transactions such as peer-to-peer transfers, bill payments, and so on. Overall, customer engagement has climbed from an average of 12% to almost 15% transactions a month in Asia's developed markets and from 6 to 8.1 in emerging markets. Fueled by growing smartphone adoption, the evolving customer behaviour and momentum towards digital platforms have enabled digital native players to snag a growing piece of the banking pie. McKinsey estimates that digital banking penetration has grown an average of 97% across Asia Pacific's developed markets and 52% in emerging markets, with between 30 and 50% of those that yet to use digital banking likely to do so. Not so relevant in Australia, of course, where the majority of people are digitally banking enabled today. Indeed, consumers now more than ever are ready to make the switch to neobanks or digital banks. So we believe Google is differentiated in this area because we can assist across the full process here, from merging data into BigQuery, visualizing it with Looker, building models that yield insights, and then passing those values back into the Google Ads business to activate on offers. Fintechs and banks in Asia Pacific will need to rely on artificial intelligence and machine learning technologies to keep up with customer expectations, but first must unshackle from legacy systems that are hindering the ability to better tap data. As consumers increasingly move towards online platforms to carry out their daily essential needs, they will come to expect the same level of service from their banks that they already experience from other internet sectors such as e-commerce. Personalisation will be deemed standard issue, and tailored services delivered at the right time on the right platform will be the service norm. AI can not only help banks enhance their services, but also enables greater automation, allowing financial services firms and fintechs to make informed decisions more quickly and effectively. It can further drive revenue with better service delivery, as well as reduce costs with enhanced operational efficiencies from automation and lower error rates. In fact, the potential value creation from AI is one of the largest for the banking industry at $1 trillion in incremental value, according to a recent McKinsey study. Its research points to robotic process automation for structured operations as the most commonly deployed AI technologies, at 36%, while virtual assistants or conversational interfaces have been tapped by 32% of banks to support customer service teams. Another 25% use machine learning technologies to detect fraud and facilitate underwriting and risk management. Fintechs that do not embrace AI as an integral part of their strategy and operations risk disengaging their customers and losing out to the competition, especially as more and more digital entrants with new product offers come to market. Banks and fintechs, although, have long talked about using data to make more relevant offers and better understand customers. Such aspirations have remained unfulfilled largely because most traditional organisations only use a small percentage of the data available to them. Each time a fintech or a bank builds or buys a new system, it needs to move data in and out of that system. As their infrastructure expands, it's not unusual for Tier 1 banks to operate hundreds of different systems and languages, with thousands of data streams moving between these systems. This can slow down processing speed and overall efficiency. Furthermore, every time a piece of data is moved, institutions run the risk of data being unreconciled or creating errors during the transfer process. There also are different data owners accessing the information and assumptions made as data is moved. This creates a potential compliance issues that can be costly for institutions, and in a sector where regulators require licensees to have transparency and explainable decision-making processes for AI. So we're increasingly seeing fintechs and established firms engage with Google across a range of Google properties, usually focused on the end-to-end customer journey. In this example, we see a complementary ecosystem play with Google Cloud infrastructure and platforms supporting the firm's innovation journey, with access to Google's users via our platforms, in this case Google Pay becoming an additional channel providing incremental growth opportunities. Okay, next let's take a look at operational speed and performance. And let's begin by taking a look at one of the world's most well-known and successful fintechs, PayPal. who manage their infrastructure with Google Cloud. We know that COVID has accelerated digital ecosystem engagement dramatically, and customers will gravitate towards the payments platform that provides the least amount of friction and the most intuitive customer experience in getting the job done. This acceleration in volumes is only going to increase as fintechs continue to disrupt the industry with compelling offerings. Banks and financial services institutions need to overhaul their fragmented legacy payment infrastructures, which can no longer support growing online demand across Asia Pacific, where consumers want real-time responses and personalised service. This will be increasingly pressing as market competition drives transaction fees further down to near zero, and financial services firms are compelled to seek out new revenue streams to plug the hole. They can find these opportunities as online adoption climbs and consumers across the region choose digital payments over cash. This will continue to grow as the global pandemic stretches on. The desire to minimise contact during COVID has pushed 61% of consumers across Asia Pacific to pay with cards or mobile apps instead of cash, according to a recent Visa study. And 75% plan to retain their digital payment habits even after the pandemic is over. So this is further fueled by a shift towards e-commerce, thanks again to the pandemic, with, for example, 40% of Singaporean customers indicating they most likely will shop online more in the future. The same habits are surfacing elsewhere across the region. Lastly, let's take a look at the expectations around security and regulatory compliance. So what I want to begin with here is just a very clear statement around Google's policy around data usage. At Google, we have a very clear line between data we collect in our consumer businesses, such as Maps, Search, YouTube, and so on, and data owned by our Google Cloud clients. Very importantly, we do not have the ability to access our clients' unencrypted data for any purposes, including advertising or sale to third parties, for example. Our products regularly undergo independent third-party audits, with over 2 million control instances audited annually. Google maintains certifications, attestations of compliance, or audit reports against standards around the world. To help you with compliance and reporting, we share information, best practices, and easy access to documentation. Our products regularly undergo independent verification of security, privacy, and compliance controls, achieving certifications against global standards to earn your trust. We're constantly working to expand our coverage. Increasingly, regulators are interested in and insisting on transparency and auditability of artificial intelligence models, especially where there is the potential for bias or fairness issues to arise. Google's success over the last 20 years has been built on the use of AI to activate data at scale, and we've taken those learnings into our AI platform and solution offerings for our fintech and other corporate customers in the financial services industry. All right, time to wrap up. So at Google Cloud, we help our fintech organizations compete by empowering innovation largely around defined use cases focused in 4 key areas: API management, data analytics, compute, and artificial intelligence and machine learning. So here are some of the ways Google Cloud meets the needs of our customers in the fintech industry. We make leveraging artificial intelligence and machine learning significantly easier than the underlying complicated technology. We are defining this space, partner with a pioneer. Our competitors aren't pushing the envelope as we are in the area of machine learning. Google Cloud is investing in secure infrastructure across the cloud stack to ensure our customers are protected. This includes private fiber networks to ensure your data spends less time on the public internet, reducing vulnerability, encryption at rest and in transit to ensure maximum security and privacy, Project Zero, which is Google's security research team that finds zero-day threats, and custom hardware and the Titan chip ensure minimal surface area for attacks by ensuring only approved code will run. At Google, we are committed to an open cloud that enables our customers to set up the optimal solution spanning on-premise and multiple clouds without being locked into a single provider. We offer tools that operate across systems and vendors and allow you to monitor your systems from a single place. Our fully managed serverless approach automatically takes care of performance, scalability, and availability requirements for your data analysis. With no infrastructure to manage, you can easily leverage products like BigQuery to analyze gigabytes to petabytes of data in minutes, not months. Google Cloud sets the standard for artificial intelligence and machine learning among cloud providers. To start with, Google democratizes AI and ML to unlock organization-wide value from data. Users can use the range of pre-built AutoML algorithms, whether through AutoML tables to run predictive analytics on structured data, AutoML natural language custom entity extraction to analyze customer sentiment scores, or AutoML Vision to incorporate Internet of Things data with edge TPUs to allow people across the organization to quickly train high-quality custom models. BigQuery machine learning allows data analysts to deploy machine learning with SQL, providing them the hassle of learning new languages like Python or R. Google matches 100% of energy consumed by our global operations with renewable energy and maintains a commitment to carbon neutrality. Every workload you run on Google Cloud has zero net carbon emissions. And lastly, but not least, Google Cloud brings the best of Google's innovative products and services to enable enterprises to create new user experiences, transform their operations, and launch new products. Whether taking advantage of native integrations like BigQuery and Google Sheets, or leveraging Google innovation across the product portfolio in Digital Assistant, Brain, Search, Maps, Voice, and more, enterprises in every industry are innovating using Google technology advances that we embed and integrate into Google Cloud. At Google Cloud, we want to support customers' existing technology investments as well as other solutions and offerings customers might be adopting to run their business. We understand that customers also want the freedom to invest in their cloud future. That's why we continue to work closely with our expanding ecosystem of partners, technology, services partners, and ISVs, and together we can help our customers become more successful. Our partner ecosystem includes technology partners that complement Google Cloud products in areas that we span across data management, infrastructure, app development, smart analytics, and productivity and collaboration. With our partner-friendly culture and availability of many of those integrated partner solutions through the GCP marketplace, we make it easier for customers to consume their solutions and services together with GCP. In addition, we have a growing ecosystem of industry ISVs who have developed software solutions specific to financial services. Finally, we also partner with a broad and strong ecosystem of services partners who provide consulting and integration services, managed services, and help build and expand custom applications on Google Cloud. So if we project forward a little bit, consumers in 2030 are going to want a mixed type of financial services. A fintech strategy must transform from one that serves its shareholders and owners to one that's designed around customers who a decade from now will want to consume all of their financial needs via a single platform and be able to move seamlessly between service providers. Thanks for your time today and look forward to the next steps. Let's take some questions now. Thank you.